Hey, I'm here. Day one was pretty good. I gotta say, pretty good. A lot of really interesting companies. The one that probably jumped out to me the most was this company called Hire Car. If you didn't catch that one, it was earlier on in the day yesterday. Um, Kind of funny because, and I said this if you were watching live, but a few years ago, like I had like an epiphany. I had an idea in my head, my idea was it would be cool if families who had extra cars, like a third car, could rent their car out to other people who wanted to like use it and or drive for Uber or whatever. And turns out that company already exists, and it's called Hire Car. So it was, and I found this out like at the time. I thought I had a cool idea, and I was the first one to think of it. It turns out I was very much not the first person to think of that idea, which is, it is what it is. But anyway, so that one jumped out to me. I thought that was a really, really cool concept. And they're coming out of this pandemic, and they're in a really hot space right now, right? They're in a space where if you saw the news from, I think was it Monday, right? Hertz is buying 100,000 Teslas, and they're partnering with Uber, and they're partnering with Carvana, and there's all this deal making happening in like the used car space. Obviously, the used car market's been on fire right now. So I thought that one was a really, really cool company.
That one was cool, and I hear you. And just double check for me, Spencer. Can you hear me? Okay, I'm seeing a couple of messages. Okay, good to go. Yeah, that one was really interesting. I thought you had some great presentations yesterday. That one stood out for me as well, especially just because it's particularly relevant. I'm trying to actually sell my car right now. I'm actually thinking about buying a new truck, and the used car market's insane. It's crazy. I mean, finding something that's even halfway decent in terms of price is wild. So this concept of being able to like ride share this kind of stuff, and I know there's apps like Turo and things like that too. That was particularly prescient, I think, especially with this used car market we have right now.
Can I ask why you want to sell your truck?
I want a new truck. I don't need a new truck. I see the commercials for the new 2022 GMC Sierra, and I fell in love. It's a great looking truck. It's beautiful.
That's
I want
fair.
one.
That's fair. The other thing that I loved yesterday was people have been asking us for a while, like, where's Jason? Where's Jason? Where's Jason Resnick? He hasn't been on the shows. He's been ignoring you guys. He's been away from us. Well, Jason came on the conference stream yesterday, and him and I had like a very good like 15-20 minute chat all about Benzinga. If you missed the news from the other day, the deal that we made with Behringer Capital, talked all about that. If you haven't got your Jason fix for a while, because he's been, focused on more important things, he came on yesterday for the longest time he's been on in a while, and we really had a nice chat, about Benzinga and about where we've been, where we are, where we're going, what this means for us, what it means for you. Yeah, it was great, honestly. So that was at the very top of the show. It was the first 20 minutes. So I would recommend that as well, because it was great to see him. Haven't seen much of Jason. He's been sort of head down in deal making mode, but it was great to see him and great to have him on the stream. So if you missed that, I highly recommend you check it out.
Highly recommend. You guys had a really good conversation too. I mean, it got almost a little bit emotional.
Oh,
It was great.
Almost, honestly, yes. I'm not going to lie to you. It almost got emotional because, like, I've been here for 6 years, more than half of the company's history. And Jason and I have butted heads a lot over the years, but it was great to see. So yeah, I don't want to say it got emotional, but it almost got emotional. But we had a lot of good presentations yesterday. Jason aside, Hire Car aside, companies like Better Life, for companies working on like serious problems like addiction. We had several psychedelics companies on the show yesterday. I'm so interested in space. I don't have any exposure to psychedelics yet. I'm interested. I'm shopping around, trying to learn the space a little bit more. And we had a number of presentations yesterday about that. So that was super exciting to me as well. I'm going through here. Another big one. Again, hot space. Recruiter.com I thought was very interesting. We had them on the Power Hour on Tuesday, and then we had the CEO Evan Sohn on yesterday. And again, with everyone, not everyone, but with a lot of people, job hopping working more than one job because they're working remote or going, changing jobs every few months or whatever. Very hot space right now, recruiter.com. I thought, not a new URL, not even really a new idea, but a massive tectonic shift in the industry of recruiting, and a company that theoretically could benefit from that. So I thought that was cool as well.
That was cool. And again, another one too that's particularly prescient right now, right? Like especially with, I mean, just the hiring lack that we're seeing. I mean, I know I've definitely still experienced it just in the retail side of the economy, right? Going into restaurants, going into stores and stuff like that. We're still seeing a lack of people. So a company like that's almost looking to address that problem, but doing the things that they're doing, again, really, really relevant to what's going on right now.
Yeah. There's a lot of good stuff. Again, the stream for yesterday is available. Maybe we should post it in the chat right now.
Absolutely should.
I can't do that, but someone, one of our producers or team members can. It's available on YouTube, and it's out there. It's available for free, right? You just got to, click on the link, and then all the agendas in the description, and it's right there for you. So we put it out there for you, for your education and your learning. So that'll be available, and then this one will be available after the fact as well. So just wanted to put that out there because all of our conferences, they live on YouTube. That's where we miss anything that's okay. So I want to say that.
Two full days of small cap. And before we get started, because we're coming up close to time, but I'm really excited about day 2. I know we have some really exciting names in the lineup. We're going to have some really good presentations. We'll get started in a minute. But before we do that, Spencer, there's a thing that we like to say about the like button. I'm going to tee you up. I want to go ahead and say it. Do your thing.
Yeah. Hit the like, guys. I can't see how many likes we're at right now, but whatever it is not enough. Can we get to 300? I think the tally yesterday, I think we got to around 400 or 500 yesterday. Can we get to 300 right off the bat right now? That would be great. It sounds dumb, but it really does help us out with the likes. And then last thing, Michael, is do we want to start the pro giveaway now?
You know what? I think that we do. We've got 1 minute. Do we want to go ahead and start the pro giveaway?
Can we just put the QR code maybe on the screen, and then if you're watching, you just take your little cell phone, you scan the QR code just like that. There's my phone. You're going to scan the QR code throughout the day. There will be questions, and you'll be entered if you answer them truthfully, honestly, or not. We won't know to win a free 1-year subscription to Benzinga Pro. Not that hard, right?
It's amazing. A free year of Benzinga Pro. And we're going to do it throughout the day, too. So there's going to be multiple polls. There's going to be multiple questions. But definitely run that. Benzinga Pro is absolutely one of the top financial platforms out there. You want to be on it in a year free for answering polls. I mean, dude, come on. That's you got to get in on it.
If you answer this honestly, we're not even going to know. We really won't. We're not going to ask you if you're telling the truth. That'd be dumb. Hey, there's our opening bell, which means it's 9:30, which means, Michael, I think it's time for our first presentation.
It is 9:30, market open, time for our first presentation of the day. And for our first speaker, we're going to be hearing from Jeff Kendrick, the CEO and co-founder of CEMATRIX. So can we go ahead and bring Jeff on here? Let's get it started. Jeff, how are you? Thanks for joining us.
Very good this morning. How are you guys doing?
Doing fantastic. Jeff, it's the market open. It's day 2 of the small cap conference, and you are our kickoff speaker today. So Jeff, I'm going to let you have the floor. Go ahead and take it away. Get us started.
Thank you, both of you guys. Of course, we're not in the used car market, but we are in another hot market, and that is infrastructure construction. So let me tell you a little bit about CEMATRIX. We traded on the TSX Venture Exchange, and we're also on the OTC markets and looking at going on the big board in Canada soon, and then maybe moving to the NASDAQ in a few years. So let me just go to the screen here. I'm going to start in slides 3, who we are. We're an on-site manufacturer and installer of cellular concrete. We use a number of proprietary technologies to produce a material that provides construction solutions that are more cost-effective than the materials that we replace. We use technically advanced, specialized premium construction material that is generally greener and more environmentally friendly than a lot of the products we replace. And because we're in the infrastructure construction space, we're looking at backfill of overpasses, bridges, backfill of MSC panels and tunnels. We're the base support for highways, runways, and facilities that are constructed over weak and unstable, frost-prone or seismic-prone soils. So a huge number of applications in our space. Key investor consideration, of course, we're one of the world leaders in this technology. We're the North American leader in the on-site manufacturing placement of this material. And this is one of the fastest growing construction materials markets in the world. We've been growing both organically and through strategic acquisition. And we produce a material that is more cost effective and generally more environmentally friendly than all of the legacy products that we replace. Just recently, we were awarded two most significant projects in our space. The last one in December of 2020. It's a $30 million tunnel project, or a 23 US project, that is larger than last year's sales. And that's important because you know where this market is going. We're still early stage and it's starting to grow. So we're seeing the number of large projects and large contracts like this growing every day. Because we use a significant amount of cement in our product, we have a strategic alliance with the largest cement company in the world, that being LafargeHolcim. I won't spend a lot of time on the ESG side, but just to say that since the beginning of our company in the early 2000s, we've been focused on ESG, particularly on the environmental side. So this is nothing new to our company. A little bit more about the Lafarge relationship. Of course, we use a significant amount of cement in our material. They don't make or break our company, but they provide us with credibility in the marketplace, really strong materials pricing, great terms on payment, and they also refer projects on a regular basis. And what's important about Lafarge now, and a lot of the cement companies, they're all moving towards going to zero emissions by 2050, and they're really focused on the savings, the CO2 in their space. So what is cellular concrete? First of all, we never replace regular concrete. So we take a ready-mix concrete, take all the sand and gravel out, replace it with a microscopic air bubble system. By doing that, we create a material that is lightweight, insulating with high strength, self-leveling, highly flowable, energy absorbing, excellent freeze-thaw resistance, and there's many other benefits. And how do we make it? We make it on site through mobile batch plants. We have 10 of these large batch plants that can produce up to 250 cubic meters an hour, 8 batch plants that can do up to 100 cubic meters an hour. And what's important about our capacity is that after the 2 US acquisitions, we have 2.5 million cubic yards of seasonally adjusted production capacity that could produce 175 million in sales without adding another shift or another piece of equipment. And last year we did 26 million in sales, and that's Canadian, of course. With numerous proprietary technologies, we don't patent them because most of them relate to formulas. These include advanced material mix designs, foaming agents, additives, processing equipment, and we're in spaces in our space that where nobody else is because we have technology that we've developed beyond all of our competition. As mentioned earlier, we're greener and more sustainable than some of the products that we replace. One of the big areas is that we replace things like styrofoams and rigid insulations, and these are what we call single-use plastics. It's not replacing straws, but if you can think of 1 cubic meter of rigid insulation, that'd be worth millions and millions of straws. So we're replacing them, and they don't break down in landfills when they go in there. Where our material is 80% air, we can break it up to 20% of its size, and then reuse the powder in future applications. What do we replace? Again, we don't replace regular concrete, so we never compete against the cement companies. We replace EPS blocks, those large styrofoam blocks you see in the bottom left-hand corner, 4x8 sheets of rigid insulation, particularly the blue insulation or industrial insulation. Expanded clays or other lightweight aggregates, weakened and stable soils, and expensive steel and concrete pile construction. And why do we replace them? It's because we're a better overall long-term solution, better structurally, and time of construction is usually 10% of the time it takes to use some other material. What is our competitive advantage? We save time, money, generally reduce greenhouse gas emissions, provide a better overall long-term solution to the legacy products that we replace. And one of the examples of a project we did, this is a road that went in between, or a highway between 2 wetlands. Traditional construction would have required sheet piling down both sides, digging out 5 to 10 meters of peat. Using our material, we just built a floating base over top of it and had the road construction back, or the road back in service in 2 weeks versus 2 months. At 40% less costs, 25% less emissions, 70% less excavation volume, and 75% less truck traffic. So you can imagine extrapolating this 600-meter section or 750-yard section over 10 miles of highway. Significant amount of savings in not only costs, but also emissions, and getting those roads back in service significantly earlier than using traditional construction. Why is this such a significant opportunity? We're in three billion-dollar business verticals. The first being infrastructure, including roads, runways, MSC panel backfill, overpass backfill, tunnel grouting. The middle section, industrial and mining, which is the oil and gas construction area where we originally started our business. That's starting to come back for us. But in the mining area, we've barely touched, and that's a huge market for us in the future as well. And then there's the commercial and seismic. I'll only mention seismic. So anywhere they're building construction or infrastructure in seismic-prone areas like California, all of that infrastructure is being underlaid with cellular concrete because it is lighter than water. So if the soil should liquefy in a major earthquake and it's designed properly by engineers, it would tend to keep that infrastructure in place and also save lives as well. For our customers, not a traditional sales situation. We educate the engineering world, particularly geotechnical engineers. They design the specifications. They go into tenders and go into contracts, go to the GCs. The general contractors call us for a price. In Canada, because we're the only large volume supplier, they call us and send us the contract. In the US, there are really only two major competitors across the US. They're both located in California, and only really one that competes across the US with us right now. Growth strategy, I won't talk about all of this, but I'll just focus on the regional expansion and mergers and acquisitions. We raised $23 million last winter during COVID. We're in the process of looking at regionally expansion, particularly down into the Southwest, the Gulf states, and into the Southwest US as well. We will do that through organic expansion, but also through mergers and acquisitions as well. And in that space of acquisitions, we're not only looking at complementary cellular concrete companies, but companies that with complementary products or other environmentally friendly products that we can sell through our sales function or our sales group. I won't spend time about the two acquisitions in the US that we made, but just to say that over the past couple of years, we acquired two of the four leading suppliers in the US, that being Mix On Site out of Chicago and Pacific International Growth out of Bellingham, Washington. This is a slide is a history of our experience over the 20 years that we've been in business, and really it's been a history of endurance. The 2008 financial crisis almost killed us because we were entirely in the oil and gas construction market, and all of our sales disappeared overnight. We started business all over again in the infrastructure market, and of course now we're facing the COVID situation. So we faced a lot of trials and tribulations, and although COVID continues to affect us now, we continue to grow, continue to remain strong, but we are seeing reduced sales, no loss of sales. But again, until the COVID situation ends, we expect to happen by the end of this year, and we'll get back in that exponential organic growth in 2022 and beyond. Financials, we're doing projects anywhere from $5,000 to $30 million. Generally, the projects can be 1 day to a few months to 6 months or years. Margins, once we get up over that break-even levels, you generally get up to the 30% level, as been proven by all three companies before the COVID situation happened, and we expect to be back into that level in 2022. We haven't been giving any guidance for 2021, and largely because of the COVID situation. You can see that our pipeline has been growing significantly. It's now at the end of the year was at 81.5 million, and last year we did 26.6. Now, the latest news release, our pipeline is actually up over $90 million. Sales, we're not giving guidance to the end of the year. Next year, we should do in excess of 30 million. We could do in excess of 40 million. We're a little gun shy, as most people are, because of the COVID and that it continues to exist in the marketplace. Again, we haven't lost any sales, but we see our sales or our projects being delayed by our customers. They're having trouble getting their work in the ground, and it's affecting when we get our work into the ground. Capital structure, we have 132.9 million shares outstanding, 175 million fully diluted. We got very little debt. We got $20 million in the bank, and we're ready to grow. very strong, experienced management team, including the 2 leaders of the companies that we acquired in the U.S. They continue to remain with us. Also, a great group of board of directors. We've added another individual since this slide has been prepared. That's John Kim out of Toronto. That's with another couple of big, well-known public companies in Canada. And he's adding a tremendous amount of public company experience and investment banking experience as well. Quickly, our investment summary. We're one of the fastest growing construction material markets in the world today. We're the world leader in this technology, the North American leading supplier. We have state-of-the-art equipment, foaming agents, and other proprietary technologies where we produce a material that's generally cleaner for the environment. We're looking significant growth opportunities in this lucrative infrastructure market, even without the $1 trillion of spending that Biden expects to move forward this year. It will benefit us, but we don't include it in our forecast until it actually really happens. We have a strong bid pipeline of over $415 million, a backlog of over $91.2 million. That's starting to go into the ground now. In 2022, we'll see a significant amount of that go into the ground. And then finally, because of the relationship that we have in the cement side, we have a strategic alliance with the largest cement company in the world, and we're growing other strategic alliances as well and continue to grow this business. We're looking at a very strong 2022 and beyond, and we look forward to continuing to work with Benzinga and all of you in this space in the future. Thank you for your time today.
All right, awesome, Jeff. A couple of questions actually from our chat that we'd like to run through. Patent protected material and process. Can you give us any insight into that? And also any partnerships or exclusive deals with any developers?
Sorry, what was the first question? I missed that.
Oh, the patent protected material and process. Do you have any kind of insight into anything that's patent protected that you guys are working on as far as your materials?
Oh, yeah, certainly. We're always working on R&D. So we're one of the companies that they're leader in this field, and we continue to be the leaders because we do R&D. And right now, we're working on an ongoing R&D project with the Department of Highways in Canada, the University of Waterloo, and this has developed a national specification for the use of cellular concrete as a best underlaying material for any roads or highways that cross weak and unstable soils. We already do that now, but they're now trying to prove that out through a research study that we've been working on for the next 3 years. That's just one of the things that we're working on so that will benefit our market for the future. But we're also looking at using CO2 in our material to make it stronger. We're using other environmentally friendly additives, including things that will replace fly ash to make our material better and stronger and more environmentally friendly. So yes, we're always working in that space. We're not working with any development partners right now, except companies that are involved in those spaces. And I can't mention them right now because we're in the process of entering into agreements with those companies. But they are in the process, of course, one of which is working with CO2 used in cellular concrete.
Outstanding. Okay, so we've got a little bit of insight into that, and obviously I know you mentioned some things that we can't really discuss right now, but we will be discussing in the future. We're certainly looking forward to that. Take us through maybe not just the next quarter, but also Q1 of 2022, to the extent that you can speak on it. Obviously, there are things we're not going to be able to discuss right now, but what are some things that our audience and retail investors as a whole should have on their radar for CEMATRIX? What are some things that we might be looking for on the horizon?
Well, we're going to have a fairly strong fourth quarter. Okay, and it's not going to be as strong as it would have been in the COVID situation. We've had a lot of projects delayed. One of the large projects I mentioned earlier that we landed, that's actually in North Carolina, was supposed to start this past spring. It won't start until next spring. They've been delayed because of the COVID situation. But what we're seeing right now is that 2022 will likely be a big breakout year for us, where a lot of these projects that have been delayed are going to go into the ground. Now, we're a seasonal business, so first quarter is always normally slow. So you really have to wait to see the entire year, because the main part of our business, because we are seasonal in nature, is that our sales come in the last 2 quarters of the year mostly, some in the second quarter, but the first quarter is generally slower. Now, we're looking to reduce the effect of the seasonality of our business by expanding into the southern U.S., where seasonality is less of an issue. And so in the future, in 2023 and beyond, we'll probably see less of a seasonal nature effect in our business.
Got it. And speaking of expanding, obviously into the southern U.S., it sounds like we have somebody semi-local, but they asked if you guys are present in the Detroit or the Denver metro area as well. Do you guys have any presence in that kind of the country?
We don't have any people presence, but we do sell into that region, and we sell into the entire U.S. In fact, we do projects, and we got a project coming up in Houston early in the new year. So even though we don't have a presence there from a people perspective or a physical presence with an equipment perspective, we're driving all over the country because we're completely mobile to do projects. So we're selling all over the U.S. and Canada, including the Denver region.
Got it. Okay, last question for you, Jeff, as we draw close on time here. I want to dig below it a little bit. We obviously went through your whole presentation just now, but talk to us really quickly below the numbers about what you're personally most excited about heading into Q4, heading into 2022. We've had a crazy year. We've been through the era of COVID, but what's one thing you would leave investors with from an investor perspective? What's really exciting on the horizon for CEMATRIX?
There's a lot of exciting things. But what we think, I think the most exciting is something that I just mentioned, is the fact that 2022 looks like everything's all going to come together. All of what we've been talking about is going to start to be realized. These projects that we have in the backlog are going to start to go into the ground. And we're seeing the market grow even more than I expected ever, even since the beginning of the company, in all areas. Right from our business where we started in the installation of Shell utilities and under buildings to these big geotechnical projects and big tunnel projects right across North America. And then we're seeing interest right across the world too. So internationally, we're looking at expansion as well. Probably not in 2022, but 2023 and beyond. In particular, Lafarge is very interested in taking us internationally with them because they get more involved in P3 type projects and construction projects internationally more so than they do in the North American region.
Outstanding. Jeff Kendrick, the CEO of CEMATRIX. It's been fantastic having you on, going through your presentation. We can't wait to have you back. Thank you so much.
Thank you very much and have a great day. Thank you.
Thank you. Jeff Kendricks, CEMATRIX, a wonderful first presentation to kick us off on day 2 of the Small Cap Conference. We've got our next speaker coming up shortly. If we have him in the room, we'd love to get him on. We're going to be speaking with Matt Bailey, the CEO of GameOn Entertainment. Matt, how are you? Thanks for being here.
I'm good, Michael. It's good to be here.
Absolutely. Matt, really excited to hear from you. We're going to let you take the floor, run through your presentation, and get us started here.
Let's do it. All right, guys. Nice to have everyone here and fill you in on GameOn. We are currently listed on the CSE under ticker GET, G-E-T. We're also on the OTCQB ticker GMETF, freshly listed. So we just listed on the CSE in June and just a couple of months after that on the OTCQB. So excited to run you through who we are and what we're up to. So we like to start with the opportunity and the problem that's currently in our space. When we look at fan engagement products specifically related to content like TV and sports, people just aren't watching or consuming that content in the same way that they used to. And most fan-focused products are very standard, linear, and tap into poor primary motivations. They're focused on just the linear event, like the game or the episode, and they don't really engage fans outside of that. And millennials and Gen Z are demanding more. They're demanding a 24/7 experience. They want to engage in their content all the time, not just during the game or the episode. And sports, TV, and live events, because of this, are becoming the second screen, but more concerning, they're becoming the never screen. Our chairman, Jay Moses, likes to mention when we talk about the problem that exists is if he hands his teenage children the remote control and says, put on ABC or put on NBC, they literally don't know how. And that is a huge problem, not only for the broadcaster or the TV network, but for the sports teams and leagues that are also on these TV networks, but also the sports books who rely on people watching the games. So this problem is a huge problem in the media landscape currently. So GameOn leverages our proprietary technology to tap into true motivations that fuel fandom, things like discovery, social engagement, achievement, recognition, and progression. These are all things that come from the video game world that we're now applying to B2B white label technologies that we're providing sports teams, leagues, TV networks to make their content more engaging, social, and monetizable through fan engagement technologies. Things like prediction games that engage fans before, during, and after games or episodes, not just sports, but things like reality TV, news, elections. We're providing these B2B fan engagement technologies for all of these teams, leagues, content owners, and distributors. And we're not only bringing the fans back and having them engage in the content more, but we're turning them into super fans through fan engagement technologies. Who we work with, again, it's broadcasters, TV networks, OTT platforms, leagues, tournaments, sports books, to gamify things like sports, reality TV, news, even the stock market, politics, and more. Again, it's always working with these guys in a B2B capacity. So although we're building products for end consumers, our business model is 100% B2B. We're building white label products that empower the distributor of the content in the sports and entertainment markets globally. Our technology is not limited to one geographic region. There are no borders to our technology. We have partners and customers that we're working with on all corners of the globe, including India, Australia, Europe. Only 40% of our partners are here in North America. We'll get into some case studies a little bit further later in this presentation. And then that B2B business model has a really, really simple revenue opportunity for us. The first is licensing. So we're charging upfront licensing fees for all of our partners that is recurring month to month, season to season, or year to year. And then there's a revenue share component. If our partners are generating revenue such as programmatic advertising, sponsorships, even selling things like tickets, merchandise, or NFT collectibles, we will participate in that, and we love to participate in that and back ourselves and back our technology, often up to 50%. And we'll go through again some of the partners' examples later on in this presentation. Now, why our partners love us is because we're offering solutions that are 100% programmatic. What that means is that we ingest a bunch of data from data providers, and we take that to programmatically generate these fan engagement experiences for our partners. So there's no additional lift for them. They don't have to have a team dedicated to this. All they have to do is give us access to their technology. We plug it into their mobile app, their TV app, or their website, and we're the ones driving engagement, data, and revenue for them. And then they go and monetize that through things like programmatic ads, brand partnerships, increasing the value of their media rights, and so on. So that's why they love us, and that's how we differentiate from other competitors in the market, is that we are a true end-to-end solution. We're not just saying, here are the tools, go and build stuff with our tools. We're a true product and technology partner from start to finish. Why we're the right people to do this is because we have a deep passion and experience in sports, media, and entertainment. These are just some of the logos of the experience of the team. Me, myself, I come from a strong sports business background. Worked for Cricket Australia and Nine Network Australia back in my home country. Then I moved to the US and worked for the Barclays Center and the Brooklyn Nets for a long time, always on the business deal-making side of sports. Obviously, I bring that capacity to GameOn as CEO as well. Our chairman, Jay Moses, greenlit the original Grand Theft Auto, and today he still remains on the board of Take-Two Interactive, one of the biggest public gaming companies in the world. He is an incredible addition. He's not your traditional chairman. He's literally calling me every day, setting up partnerships, putting M&A prospects on our desk. He's an incredible chairman. Santi Jaramillo, our chief product officer, spent 10 years building the FIFA game at EA Sports. Most recently, he was head of sports at Dapper Labs, where he literally conceived and brought to life the very infamous now NBA Top Shot product. which is doing, I think it's nearing $700-800 million in NFT collectible sales. So obviously Santi and Jay bring that video game background that we're now applying to the content and the prediction games and the fan engagement technologies that we're delivering for our partners, that we're going to walk through a few in a minute. And then finally, Ryan Nowak comes from Madison Square Garden, New York Knicks and New York Rangers. He's our VP of partnerships. He was formerly driving revenue for all of these great properties in New York, and now he's driving revenue for GameOn. And then just here's a bit of an extension of some of our board directors and advisors. Kerry Dillon comes from Y Yoga, also advised FIFA and the Olympics. Boris Gartner, the US CEO of La Liga and former Univision executive. Tim Cahill played for Australia in 4 World Cups, also played for Everton in the EPL, and he's still a current FIFA ambassador. And Sabrina Carrozza, advisor and PR lead, also runs PR for FC Barcelona, Drive by DraftKings, and is a professor at NYU. So you can see the team that we've built is world-class. We really focused on that first and foremost, building the great team. Once we raised money back in March, $5.8 million, listed in June. Throughout that time, we've grown the team, and now we're starting to see the fruits of labor of this great leadership team come to life through partnerships and revenue. Now we'll go into some case studies of who we work with so you can kind of see and touch and feel. I'll direct you on where you can go to play some of our products. So we work with NBC Universal and Bravo. We partnered with them on The Real Housewives for the official prediction game. So every Sunday, the episode would be when the episode would play. Throughout the week before that, you could make predictions on things that would happen, like which housewife will appear first, which house husband will appear first. Will there be a proposal this episode? As you can see, it looks and feels like a Real Housewives experience. It's not a GameOn experience. We're just powering the back-end technology and product. Since introducing this, we saw really great traction week on week, 280% growth week on week, which was really exciting to see. This was our first white label product. More recently, we've partnered with MX Player and Times Internet. Times Internet is one of the biggest media conglomerates in the world, based out of India. One of their companies, MX Player, is an OTT platform that has 1 billion downloads, billion with a B, massive numbers. We recently launched a cricket product with them to power all of their cricket prediction games. For all of the cricket fans watching now, you'll know that the World Cup is happening. Very exciting. Cricket is the second most watched sport in the world behind soccer. And we are powering all of MX Player's cricket prediction games. We just launched this last week. If you do use an Indian VPN on your phone, you'll be able to play this. And download MX Player, go to the predictor game and actually touch and feel this product. It is live right now, but since launching it, they've loved it so much that MX Player has just confirmed, we announced it this week, 3 additional projects with GameOn for soccer, tennis, and kabaddi. Kabaddi is a traditional Indian sport. So that expanded partnership is really important for us and significant because, first of all, it shows our product market fit. One of the biggest media companies in the world, one of our customers, loved it so much that we're doubling down, not only doubling down, we're 4Xing that partnership in a very short period. If you go to gameon.app/news, you'll be able to read the press release around this. Why it's also exciting is that it also 4Xs the revenue opportunity with this partner. It turns it from about a $200,000 revenue opportunity to an $800,000 revenue opportunity. So very excited about our continued partnership with MX Player and driving further into India. And then another deal that we just announced is with Chibi Dinos, an NFT collection. Those that are familiar with NFTs will know about the 10K projects. Chibi Dinos is a 10K project where there are 10,000 digital dinosaurs. NFTs are very binary right now. You buy an NFT, you hold it, you hope the value goes up, and you sell it. That's all you can do. And similar to the problem that I explained about media, where people aren't engaging with that like they used to, here it's the same. People are demanding more from NFTs. People are demanding a utility, and we're bringing a layer of gamification utility to Chibi Dino NFTs. The deal guarantees GameOn 120,000 in licensing revenue, and then we're participating in 50% revenue share of primary and secondary sales of NFTs. This is super exciting and important because that revenue share component is uncapped and in perpetuity. So when those NFTs get sold on different marketplaces like OpenSea and outside of the Chibi Dinos environment, GameOn is written into the smart contract and will receive a commission or a revenue share component in perpetuity. So this revenue opportunity is truly uncapped and really exciting. And this Chibi Dinos partnership is first of its kind, not only for us, but in the market. Nobody else is doing this. And we're applying our fan engagement technologies to a completely new category of customer that we're now going after as a first mover, as a first entrant. This product will launch in Q1 of 2022. Finally, let's get into some numbers and some details on the corporate side. We've raised 5.8 million in March, like I mentioned. From then, we've really focused on growing the team. We still have 3 million in the bank. We're spending 250,000 a month. 70% of that is on people. It's on employees and consultants. Again, that's what we've really focused on. Yes, we have patents and we're protecting our IP and we're doing all of that, but hiring world-class leaders and getting them on board the GameOn rocket ship is really our unmatched advantage. We went through some of the team before, and we still have 12 months of runway. We're in a great position. That's assuming no revenue from those partners that I just mentioned. And here are our revenue projections. So we're just transitioning right now in Q4 from pre-revenue to revenue, and we're really going to see that scale in 2022. These projections are very conservative. They're based on our current cash burn, and they're highly scalable with additional financings. Here are some comparables. Obviously, this market is really exciting. We've got folks like Bragg, Fans, ESC, and Real Luck doing some great things in the Canadian market. All of these comparables are trading at between 3 and 40x of revenue. So if we go back to these revenues here, we're very confident that we can trade at a similar multiple as we start generating revenue in 2022, 2023, and then really scaling in 24 and 25. A reasonable expectation would be 15x, which is the average multiple of some of these comparables in the market. Capitalization, 63 million shares outstanding. We're floating around that 20 million market cap at the moment. A big part of this, or an important note here, is that 50% of our ownership is insider owned. We're all locked up. We're all fully vested in the future of the business, and it's a really tight float that we have right now. And just to recap on what I just walked through here, we raised 5.8 million in March. We listed on the CSE in June. We became DTC eligible and OTC listed just after that. We've grown the team from 3 to 19 full-time. We'll be 20 plus by the end of the year. And off the back of that, we've secured 10 and more actually right now revenue generating projects. Those of you that might happen to know me and have followed us before this, you'll know that we're executing. We're doing exactly what we've said, and we will continue to do exactly what we're saying. And what that means is more announcements, more deals, and revenue. If you go to GameOn.app and sign up to our updates, what you should expect from us in the next few months is partnerships. That's what we're really focusing on. That's what the mode we're in right now. You're going to see GameOn partners with X, GameOn partners with X, GameOn partners with X, and you know that there is licensing and revenue share attached to that. You might also see some M&A. We've been looking at a lot of M&A targets, and we hope to execute on that in the next 6 months or so. But really what you're going to see is announcements, deals, and revenue. So that's it from GameOn. I'll hand it over to see if there are any Q&A. I'd love to answer some questions.
There are, yes. An absolutely wonderful presentation, Matt. Thank you so much for taking us through that. And we have a few minutes, which is excellent because we do have some really good questions from our audience. I want to try and get through both of these that we have written down. Can you dive into the partnership with Ticker? Talk about what that means for users. I know this was fairly recent.
Yeah, so with Ticker is a shareholder perks platform. So we're always finding ways to to give back to our shareholders. So what you can do with Ticker is you can go on their platform, create an account, and actually connect your brokerage account to Ticker. That will validate your ownership in GameOn. And if you hit a certain number of shares of ownership, then you're eligible to claim a perk. The types of perks we have up there are swag, so things like hoodies, hats, credit to go and claim some swag. There's also a $200 Amazon gift card. And then soon we're adding an exciting new perk where you get to come to a Miami Heat game with yours truly. So yeah, we've got some great perks. We're adding perks to it. So if you are an owner of GameOn, or you will be soon, make sure you do connect to Ticker and claim your perks.
Love it. That's great. And love the Ticker platform too. I think that's really fascinating. Love the partnership there. Another question we had, any communications currently with sports betting companies that could utilize this tech and this service from GameOn to drive greater consumer engagement? Anything like that in the works?
Yes, so right now, if we look at the pillars of the ladder of category that we're going after, at the top is media, sports governing bodies, think FIFA and the likes of that, and then leagues. That's kind of where we're focusing. But then sports books are starting to become more and more of a targeted customer for us. How we can work with them is not on the pay-to-play side, but on the free-to-play part of their funnel. We think that they're currently implementing pretty poor free-to-play engagements that just tap into playing for free and winning a little cash prize, and very obviously are just a lure to try and get you to place real money bets. We can help sports books by making a more engaging free-to-play game that, again, taps into the true motivations that fuel fandom, like social engagement, recognition, progression, the things that I spoke about earlier. So yes, sports books are a category that we're going after, and we're having multiple conversations in our pipeline there.
Outstanding. We're really excited to watch that progress. And then as we close, I mean, I would say that the thing that really stood out to me about your presentation too was the financing position that you're in with 12 months of runway and what you're spending per month versus cash in the bank, and being able to invest in, like you said, those world-class people that are enabling you to create this environment for your users and your audience. I'm sure those world-class people are making all the difference in creating this environment for users and doing things like the Ticker partnership. I'm sure you'd agree.
Yeah, I mean, people are everything. People are why we are where we are, and people are why we're going to win. Like guys like Santi, our chief product officer, who built Top Shot, our chairman, Jay Moses, who greenlit the original Grand Theft Auto. Like, these are the guys that are the reason why people want to work with us, our customers, but they're the reason why we're going to continue to scale this business successfully. And like I said, like, people always ask, like, are you protecting your product with patents and whatnot? Yes, we are, but the people and the team we have are by far the most unmatched advantage that we have. So we'll continue to focus on team.
Fantastic, Matt. Can't wait to watch that unfold. You obviously have the right crew in place. It's been a pleasure having you on today. Matt Bailey, CEO of GameOn Entertainment. Thanks for being here.
Thanks, guys.
All right, awesome. Speaking with Matt, another great presentation. We're on a roll. We're going to roll into the next one actually right here at 10:10 a.m. We have with us Andrew Barwicki, the Senior Vice President of Investor Relations at MEDIROM. Andrew, how are you?
Good morning. Thanks for having us here.
Absolutely. Always a pleasure. Andrew, I'm going to let you have the floor. You've got a presentation teed up. Let's go ahead and get it started.
Excellent. Well, thank you. And thank you for everybody for participating. What I'd like to do is first just give you, before I go through the PowerPoint slide, just give you a quick history about the company. MEDIROM is a publicly traded company. We did the IPO back in December of 2020, so we're still in the early stages of being public, but we're 10 months in, and everything is going very well, I'm happy to say. So obviously, like any other public company, we have some forward-looking statements or important notices. I'm not going to read all of them. I just want to let everybody know that we do have forward-looking statements. And in this presentation, there may be some forward-looking statements which involve risks and uncertainties, but we try to keep everything factual here. With that being said, MEDIROM operates massage parlors, bodywork salons in Japan. As of August 31st, there were 315. As you can imagine, business is fluid. Things are going very well. As of yesterday, we have 316. So it's a constantly changing business. We've added, I'm happy to say that we've added quite a bit over the years. So if you look at our history and you look back into the company, last year there were as of 2020 in September, there were 284.
Well, Andrew, really quickly too, before you keep going, could you put this in present mode for us as well?
Sure, absolutely. Is it in present mode now?
Okay, looks good.
Good.
Awesome.
Okay. So we're up to 316, obviously significant growth from last year at this time. Our relaxation salon business segment experienced a revenue drop from 2019. Having said that, for the fiscal year December ending 2020, we did 32.3 million in revenue. There was a decline of 14%. However, a lot of that's attributed to COVID. We are always evaluating businesses. We're always evaluating locations. So these locations at times, sometimes we do close them if it's not performing well, but there has been growth. So the revenue growth has declined, but I'm happy to say we keep expanding as COVID goes behind us or things get better. We see that we should expect additional business and revenue growth. We also have digital preventive healthcare business. We give health guidance program in the segment business that we expect to grow in the future. We also have Mother Tracker, which we believe is the world's first chargeless wearable health tracker, which was presented at the 2020 CES. And we're expecting to launch it at the end of this year, early next year. And the reason we say early next year, as you can imagine, we have manufacturing has to occur. We have a great partner in Canon. It is something that we're proud of, and it's something we believe is going to be a significant opportunity for the company. But there have been some delays, but we believe that end of this year, January of 2022 is when we'll be able to move forward with the Mother Tracker. Talk about the history of the company. So we were founded in 2000, obviously. It's continuous growth, which is really important. There's never been a period of time that it was slow. It was just from 2000, so going into our 11th, 12th year, it's just been continued growth. As I mentioned before, we did the IPO in December, 11, 12 months ago. We closed on a $12 million stock offering. We've made some acquisitions throughout the year. And again, as of yesterday, we're up to 316 salons. So we feel, even though COVID impacted us, we feel we have the history, we have the foundation, and that's going to continue to assist us as we move forward. When you look at M&A, and in this business, it's organic growth as well as M&A. And there's 1/3 of the industry is comprised of lesser known salon brands. So that's opportunities for us. Strategic, sometimes it could be locations we may not be in. But the bottom line is we feel that there's opportunities both organically and with M&A. And when you look at M&A, as a public company now, it gives us a great deal of opportunities with smaller companies that may have 2, 3, or 13 locations. If you look at our acquisition history, 2018, we made a number of acquisitions. This was before the IPO. So since the IPO, we made a couple acquisitions. Again, opportunities to expand strategically, not just opening up a place and just putting it there. Looking at the history of some of the companies, some of our competitors, and calculating strategically what's the best way. And there are opportunities out there right now. There are a number of opportunities that we think can enter us into new locations and give us additional opportunities. Again, whether it's telehealth therapy, whether it's the Mother Tracker. So when you buy a location, it's not just a location for one business. Again, we can basically vertically integrate telehealth therapy, Mother Tracker. The relaxation salon business, basically it's more than just a massage, is providing the best preventive solutions. It's an opportunity to help people that may have medical issues, more than just soreness. So it's an opportunity to let the public get medically better or prepare themselves. Here's a snapshot. Our brand, our key brand portfolio, Ray Kaku, as well as some of the acquisitions we made. We focus on a lot of holistic and preventive healthcare services. It's amazing when your body, and as we get older, I'm 53, when you get older, you realize you're sore more, whether you're playing sports or you have a long business trip. That's something, you could prevent a lot of that if you properly take care of yourself, in addition to obviously properly dieting. We consider it significant operations when you have 316 salons. Like I said, we had 315. We just added one, this 316. It's an opportunity to really impact people on a very private level and get them in a mindset that they feel better, they act better, helps them with work, all facets of the business. Our repeat customers, it's something that's very, very important. So 70,000 customers were served in July 2021. That was the largest number we ever had. Now, when you look at that, when you look at September 2020, we had an 80% repeat ratio. In September 2021, we had 82%. So even throughout COVID, our repeat customers, we like to consider them loyal people. So our services, it's almost like a proven model. It's working for everybody. And the repeat customer ratio, that just tells you that everybody's happy. We have recurring fee model. We have franchise fees, monthly education, marketing, real estate services, and consulting. We're not just a company with one business model or one part of the business. We're a diversified business, and we think that's going to help us. It's always helped us, but we think it's going to help us even more, especially with acquisitions. Vertical integration is very important in this business. The multiple model, right? The Ray Raku brand. We have very good established relationships in all facets with our suppliers, manufacturers, companies that service us. It is a tough entry to barrier. We've made it a lot easier and almost to a point of cheaper because we do it so well. Obviously, it's one thing to hear from an insider that we're doing well, but numbers don't lie, right? When you have revenues that we've established, when you have repeat business, we think it just proves our business model. And we're expanding that. It's not something that we think we should just wait or sit on. We just want to continue to expand that because it's working. Strength in retail customer touch points. This is something I touched on a few seconds ago. High repeat customer. Our areas, where we're located, high density areas, metros, subways, malls, plazas. That's very important because in high density areas, you realize that people sometimes aren't focused on themselves and health, but yet when they come to our spas, when they come to our locations, they not only enjoy it, it starts becoming a part of their life. And then they become this repeat customer. So sometimes we'll get a customer that had no intention of working with us or being coming into one of our salons, but because where we're located, they become a customer. Again, core brand sales per customer, $62.85 in the year ended December 2020. The industry standard is $50. Again, that's the source for that was Yale Research Institute report in 2019. So we're above and beyond that. We're far exceeding the industry standard. And I think that also serves well or has proven that even though COVID impacted us, we were able to continue an increase with customer loyalty, repeat customers. So it all works together. Contributing to higher sales per customer is obviously from a business perspective. During spring, during the 4 seasons, I'll call it, reflexology promotions. During the summer, head spa promotions. Autumn, GI tract care promotions. Winter, hand care. We're always looking for new ways to present the company to current and prospective customers. We're always looking for ways to really service the market and utilize our locations and kind of mix and match. And again, relaxation is one part, telehealth therapy another, mother tracker going to be another. But also working with our customers, providing them opportunities for specific promotions, especially during the seasons. We're getting a good grasp, when you're in business for 11, 12 years, You're getting an understanding of what customers want, what your current customers want, and what it takes to get new customers. And that's something we really pride ourselves on, is working with and hearing what our customers are saying. We also have, and it's something that a lot of people are surprised when we talk about this, we have an educational facility. We have one of the largest educational schools in Japan. It's open 7 days a week. Reiraku therapists support customers in our salons and after their appointments through health management tailored for each customer. We educate future employees. We educate them really from the bottom up. We're able to show them how to run a business, how to service a customer, how to interact, and that has really done well. And when you have a location that's able to implement and educate future employees, and whether they're, when you have 316 or 17 locations, you realize that you want to have consistency. We want to have people that come to one location and they go to another location and also get the same service. So we think our educational salons are educational facilities are very, very important, because it establishes a business culture. It establishes a manner in which professionalism is presented, and our customers love that. And the word of mouth obviously is a great thing. So when you're able to service a customer, the word of mouth from that customer works, and that all starts with our educational school. We have award-winning salon and therapists. Obviously, we're very proud of that. When you look at, on this slide, we'll show you some presentations or some awards in 2019. Obviously, 2020 with COVID, there were some restrictions and there weren't as many awards, but there were no competitions held in 2020 due to COVID-19. But we're very happy with our accomplishment. And those accomplishments, believe it or not, it starts with our founder. It starts with the business, and then it really gets implemented in our schools, and that's what teaches our people how to work with the public. So our awards are something we're very happy about, but more importantly, we want to continue that. I'd like to go to talk about a little bit about the digital preventive healthcare business. This is something that's relatively new. It's something that's really moving forward quite well and according to plan. Our Live app is a digital platform that helps the participants of the government-supported program connect with healthcare professionals. It's including registered dietitians and licensed nutritionists in a coaching environment that emphasizes daily dietary and exercise feedback and results-oriented health advice and emotional support. So this app is something that really takes upon more than just going on your computer and reading. You read something on your mobile phone and you really read about how you can impact your life in a positive manner. Everything from just what you eat to exercise. And this is something that's government sponsored. This is something that's very, very important, because it provides sometimes an opportunity for a person that is not feeling well. Something that can help them with their day-to-day operations. And the objective is to get people healthier. That's the number one thing. Mother Tracker is a wearable tracker that self-charges through body heat and monitors health activities 24/7. Again, it's the world's first smart band and does not require charging. This is something, we're very happy with what we've accomplished to date. We expect it to be launched at the end of this year, as I mentioned, possibly early January 2022. We have great partners with this, Canon being one of them. And we're hopeful and confident that once we're able to present it, it'll provide something for the general public to improve on their health and their well-being and prevent injuries and get better health and get better mindset for health. The specific health guidance business, we work with insurance providers, we work with the government, we work with the Ministry of Health, Labor, and Welfare in Japan. It's something that continues to work, and we work with insured people. So this, MEDIROM, when it was built, it may sound like it was just an idea for one location, but it turned out to be something that we're really moving forward with and working with health insurance governments. And I think it validates what we're doing and how quickly we're moving. I talked about a little bit about the Coaching App Lab. I think this presentation will just give you a little bit more insight into what it does, how it helps you sleep better. But I think you can also go to our website and you can learn more about it. I don't want to spend too much time on any one topic today. Same thing with the Mother Tracker. You know, when you look at this, I think something that I may not have mentioned before, but our target market, hospitals, nursery homes, and gyms, it's really for people that are well aware and understand that being healthy makes their day-to-day life better and really makes longevity just as a person out there. From a financial highlight, I think they speak for themselves. We have, like I mentioned before, we have had a slight decline in revenues, all of which were attributed to COVID, but that hasn't slowed us down. We continue to open new salons, as is evident with our number of salons. So even though COVID impacted us, we are not slowing down. Our adjusted EBITDA, we did have negative. It's something that we knew. This wasn't a surprise. It's something we planned for. The IPO, as I mentioned, in December, it helped us expand. We made some acquisitions. Our cash position very strong, and we continue to look at opportunities. But being a public company now, we see that those opportunities are now given to us a little bit more. This slide just tells you about the revenues. Again, as I mentioned, 32.3 million in 2020, slight decline as compared to the prior year. Balance sheet, you know, again, these numbers are as of December 2020. We are a foreign issuer, so we're not required to file 10Qs and 10Ks just yet. However, we intend to file the earnings release at the probably the first week of November. So that will allow people to take a closer look at us. Again, this is just another part of the financial statements as of December 30th. We issue I'm happy to say, we issue what's called a KPI, key performance indicator. This allows people to, or investors, as well as general public, just to see some of the successes we have and how we've grown. So this KPI trend, or as I mentioned, key performance indicators, allows investors to get an understanding of locations, repeat customers, dollars that are spent, all of which are very good for us, or we consider them good. Obviously, our management team, we've had people that have been with this company for many, many years. The culture is one of which health comes first, well-being, establishing, educating people, so it's not, we don't have a high turnover. At this time, like I hope I was able to present the company so everybody understands it. And if anybody has any questions, I'm happy to answer them.
It's fantastic. Thank you, Andrew. Great presentation. Awesome hearing a little bit more. I do have a quick question that we kind of wanted to cover. We've got a minute here before we move into our next segment. So let's talk about the acquisition of ZACC. What caught your guys eye there? What was the catalyst that led to that acquisition? Can you give us some of the highlighting factors?
Yes, absolutely. So thank you. Strategic. In this business, you just can't make an acquisition just because it's available. This is more strategic in locations. The amount of locations that the business had, and also, are we able to upsell? Are we able to upsell and take what we have and improve it? So, the word strategic seems like a simple word, but for us, it's making sure that it's a location that we're not competing with. It's a location that we want to go into. We know that there's a high density area, and we think it's better to acquire as compared to compete. But also above and beyond that, vertically integrating, upselling, providing better or more services, and also educating. Sometimes a business could be doing very well, an acquisition target was doing well, but you have to also be able to identify if there are weaknesses. Can we come in? Can we educate? Can we send some of the employees from some acquisitions to our schools? And that would improve the business. And that's how we look at acquisitions. And regarding that specific one, that's what we saw: location, upselling, and just improving the overall business.
Absolutely. Well thought out, a good strategy. And obviously, we look forward to seeing what fruit is born out of that acquisition. Obviously, a great move. A lot of good things to come from MEDIROM. Certainly, Andrew Barwicki, Senior Vice President of Investor Relations. Thank you so much for joining us.
Thank you, and have a great day. Bye-bye now.
Awesome. Good to have Andrew on. Great presentation. We are moving into our financial education segment. We've gotten some great presentations thus far, but we have waiting in the wings Mark Putrino. Mark is one of our technical analysts, a Benzinga staff writer, is coming on for an education segment. So let's add Mark. Mark's got some slides. Mark, how you doing?
Hey, I'm good. How are you?
Doing well. Good to have you on. We are going to let you take the floor here and walk us through small cap stock trading. This looks fantastic, man.
Okay, cool. All right. Well, thanks everybody for checking in. First I'll introduce myself. My name's Mark Putrino. I am the head of the Benzinga Trading School, and I have my background is in the institutional trading world. I was in it for about 20 years. My first trading job out of business school was with Mario Gabelli, who's a really well-known manager. I'm sure a lot of the people who are watching this have probably heard of him. While I was there, I was a market maker on his broker-dealer desk. So that was a great opportunity, great learning experience. Then I went over and spent some time trading for Steve Cohen, who is mostly known these days by the show Billions, which allegedly is based on him. I've never watched the show, so I don't know if it's true or not. You would be surprised how many people say, "Oh, you work for Steve Cohen? Is Billions true?" Anyway, I have never watched Billions. After that, I was a head trader at 3 different money managers, each for about 5 years. And I oversaw the trading of pretty much any strategy you could possibly think of, equities, bonds, currencies, options. So I've been around the block a few times. And probably about 5 or 6 years ago, I decided to leave the industry because it just became no fun. When I first started in the industry, in the 90s, it was fun. There was a lot of camaraderie, a lot of socializing, going out to dinners and games and so forth. But then a lot of things just got computerized, and computers replaced most of the people. Just to give you an example, everyone's familiar with Goldman Sachs. When I started trading institutionally, Goldman Sachs had what are known as a cash equities trader, someone who trades stocks as opposed to derivatives or whatever. They had 600 cash equity traders. Okay. Now they have 2. And the only reason why they have 2 is because if you work for a broker dealer or an investment bank, you by law have to take a vacation every year because they want to make sure if you're trying to hide something or an error or something that you can't do it. So you are legally required to take a vacation. So one person could do the work that 600 people did, 25 years ago. So I wanted to get into education because it really bothers me when I see a lot of the things out there in the trading world. There's a lot of misinformation, a lot of people trying to sell you like some secret system, which they don't exist, some secret system that's always right. I saw one time where in a newsletter, a particular author or whatever you want to call them was bragging about how they recommended a stock that doubled in value. So it's like, oh, in 1 week, I doubled my money. So I thought, well, that sounds pretty good. Let me take a look at it. Turns out that the stock went from 1 cent to 2 cents. Okay. That's not the same as going from 10 to 20 or 50 to 100. 1 cent to 2 cents isn't really a big move. Every stock has a bid and an offer, right? The bid is the highest price anyone is willing to pay you at the time. The offer is the lowest price anyone is willing to sell at the time in the market. There's a bid and offer on every stock. So if this particular stock was bid at 1 cent and offered at 2 cents, if someone came into the market and sold, they would have gotten 1 cent. Okay. Then if 5 minutes later, someone came into the market and bought, they would have paid 2 cents. So the stock this promoter is saying, oh, the stock doubled, but in reality, it didn't move. So when I see things like that, it kind of, that's what kind of made me come over here, because I like teaching people. And so far, the trading school is going very well. I would invite you to check it out, but let me go into some things about trading here. Now, in our classes, we focus on basic fundamentals and common sense type stuff. We focus on what does an institutional trader focus on? Like when I would go into the trading desk in the morning at 7, what am I looking at? I am looking for the stocks that we're trading or the investments we're trading. I'm looking for which levels are important, all right, because particular price levels can be very important. I'm also looking at, which we're not going to cover today. Today, I just want to focus on levels because I think this is a good educational thing, and we don't want to force too much at once, but we're just going to focus on levels. But in the classes, we have a class on levels, then we have a class on trends, right? Because the stock is always trending. It's always either going up, down, or sideways. Today's class, we talked about momentum. That's the force that's driving the trend. So we keep it really, really simple. It's just basic supply and demand dynamics. Every chart should be viewed through the prism of what does this show about supply and demand. If you can keep that in your mind, you can look at charts and get a much greater sense of them. All these patterns, I'm sure you've probably heard of the head and shoulders pattern or ascending triangle. If interpreted correctly and understood right, these are graphical illustrations of what's going on in the market in the sense of what are the supply and demand dynamics? Are they shifting? Are they not shifting? Some people think that reading charts is like, reading tea leaves. Well, for a lot of guys or a lot of people out there, it is. And unfortunately, technical analysis has a bad name, but I can understand why. A lot of the technical analysts don't really understand the fundamentals, like what I just told you. They look to find these patterns and they think it's this or they think it's a head and shoulders, but they don't really understand just what it is that they're looking at. Some other analysts go into these really far out esoteric techniques like harmonic charts or GAN analysis. If you can make money with that stuff, that's great, but I don't do it because in the institutional world, we just don't do that. So I never did all that stuff. We just focus on what are the trends, what are the levels, what's the momentum. So sometimes the reason why a particular level is important is obvious. It could be a round number, like $100. A lot of people will say, they bought a stock at 80. Oh, if it gets to 100, I'll sell it. They don't say I'll sell it if it gets to 99.6 or if it gets to 100.34, they say I'll sell it at 100. So what happens as a result of this is when you get to these round levels, which we call psychological levels, they may be important, right? So that's one reason why we'll know why a level is important. But sometimes the reason for the importance isn't obvious. We could just see a really clear support level, but we don't know why support's there at some strange number. But we don't need to. We just need to know it's there. Like Neil, who is a colleague of mine here, always gives a great analogy. He says, you could be a professional race car driver, but you don't really need to understand the internal combustion engine and how it actually works, right? My analogy is, I know when I flick on the light switch, the light's going to come on, but I can't explain electricity to you. So, but we'll delve into this a little more. So sometimes a level can be important for months or even years. There are support levels and resistance levels that can retain their importance for years. What is a support level? Now you might ask. Well, support is a large concentration of buyers who have gathered at a certain price. A bunch of investors all want to pay, say, $20 for a stock. So at that level, there's going to be this concentration of buyers, and we call that support. Generally, if a stock is going down and it gets to support, it'll stop going lower because there's enough demand to absorb all the supply. Resistance, and we're going to go through these separately, and I'm going to show you some examples. So if you're not following, just be patient because you'll see what I'm talking about. And this will really help your investing and your trading. Just having this basic knowledge of knowing that certain levels are more important than others is enough to help you. And what's really interesting is a level that was resistance can turn into support, and a level that was support can turn into resistance. And we will examine this a little bit more. So let's delve into support. You'll notice I put the word demand here too, because remember, when we're looking at charts, we are looking at a graphical illustration of the supply and demand dynamics that are occurring in the market. So we just mentioned support. It's a large concentration of buyers who are all trying to pay the same or close to the same price. So now at a support level, there is more demand for the stock than there is supply. The buyers can't buy all they need to. There's more demand than there is supply. So what happens if a stock is going lower and it reaches a support level, it'll stop going because now there's going to be enough demand to absorb all of the shares that the sellers are selling. At support levels, sellers can sell all they need to. There's enough demand to absorb all of the supply. So this is why market sell-offs pause or halt when they reach support levels. And this is a good thing to know for a lot of reasons. For example, we have a student in the class who wanted to place a buy order at a particular level. So we looked at the chart together, and it turns out that buy price was below a very, very clear support level. So what we talked about in the class was the stock was trending lower, and we said if it gets to the support level, there's a good chance it stops going lower, and it reverses and it starts going higher. That's exactly what happens. Now, the student, had they placed their order where they originally wanted to place it, wouldn't have gotten executed. The stock didn't drop that much. They wanted to place their order at like 20, but we saw there was really significant support at 21. So the stock got to 21, reversed, and now it's trading around 30. So as a result of our conversation, the student placed their order slightly above the support level. They placed it, I think, at like 21.25. So they were able to buy the stock, and now it's trading around 30, and they have a really nice profit in just a matter of maybe 3 weeks or a month. So had this student not understood what a support level is, they would have had their order out there. It would have never gotten executed. And now the stock's at 30, and they would be upset and asking them, what they did wrong. So we have to let the market tell us what to do. We can't outguess the market. If we see a support level, well, we should put our buy orders a little bit above it. That's the market telling us what to do. We're not just guessing. So resistance is the opposite. Resistance is a large concentration of sellers who are all trying to sell at the same price level. So at a resistance level, there's more supply than there is demand. A buyer can buy all they need to at a resistance level. They don't need to push the price up any higher. There's going to be more than enough supply to satisfy all the demand. That's why rallies pause or halt when they reach a resistance level. And we could use the same logic as with the buy order. We could say a particular investor wants to sell a stock at a certain price. Say they want to sell it at 30, and they're not aware that there's a lot of resistance at 29. Well, say the stock is at 25, it could get to 29, it could roll over, and it could go to 2. Now, this investor missed selling it because they didn't understand where or how to look at resistance and support. So there's a lot of ways this can help you. Order placement, you can also use it for order targets, your sell targets. You buy a stock and it starts going up and you say, well, where should I sell it? Well, if you look at the chart and you see that it's approaching a former resistance level, there's a good chance it's going to hit resistance there again. So that would be a good place to have your sell order, or a logical place. So I just want to show you a couple stocks here. And my intent is just to show you that there are clear levels that are out there. And this stuff that I'm talking about is, it's true. I'm not just making it up. A lot of times the levels won't be as clear as in these examples because it's usually more of a zone. But sometimes they can be really narrow. It all depends on the stock. So this is this Naked Brands group. This is a penny stock. Right now it's trading around 65 cents. But look at the support level down here at 50 cents. Okay. Like, you don't need to be a market guru to see this. When the stock was selling off, remember, it got to support. What is support? Well, at a support level, there's more demand than supply. There's enough demand to absorb all of the shares. So the sellers don't need to sell it down anymore. So what happens? It stopped when it got to the support level. Rallied again, came back to this support level once more. Rallied again, came back to the support level once again. So this is over the course of like 2 months here, right? Then in July, it got to 50 cents again. Once again, it was a support level. And then here in August, it got to 50 cents. Now, I would be willing to bet, well, we don't want to say bet when we're talking about investing, because we're not betting or gambling. We're making educated decisions. At least that's what we should be doing. Most investors that get wiped out, it happens because they make emotional decisions. They guess. They don't have a plan. You need to have some kind of a plan, because you need to have something that's going to take your emotions out of it. I'm sure many people that are listening to this probably bought a stock and it went down a little bit and they just held on to it, hoping it would come back, and it just never did, right? You can't trade on hope and you can't guess. Now, how would you use this? Well, if Naked Brand gets back down to around 50 cents, there's probably a good chance there's going to be support there again, and it may bounce. So in this situation, if you wanted to buy it, you could put your order at, say, 51 cents. You don't want to put it at 45 cents because it may never get there. So this is a clear example of a support level. This is this in Servco. Now this is an 18-month chart, right? So way back here, when the COVID crash happened, this stock found support around the 110 level, and then it rallied. Then come April of May of this year, it found a little bit of support. And then in July and September and August, it was support again. So this is, sometimes you might hear the expression, markets have memories. And this is what people are referring to. A market has a memory. The market remembered that there was support at this level. I mean, how is this possible? Or there are a bunch of people that said, I'll buy it at 110 here. And were they patient? Do they wait for, a year and a half for the stock to come back? I mean, I don't know. I don't know. It's one of these amazing things about the market and about looking at charts. But it's a clear example of support. So, if this thing gets down to about 110 again, and I think it's getting pretty close, this could be something that we consider potentially buying, because it might rebound again like it did the last times. So support and Servco at 110. This is CVD equipment, and I'm just pulling these stocks out of the air. I just looked for ones that were small caps that had clear charts. So I don't know what these companies do. This is not a recommendation to buy them or anything like that, but it's just a graphical illustration that are clear. So in this stock, we have clear support down around the 390 level. This is the COVID crash. This is April. This is May. Actually, I take that back. This is not the COVID crash. This is March of this year. But it fell to the 390 level, found support and rallied, found support and rallied, found support and rallied. Then in July and August, it was support again. So another example of a clear level. We also on this chart see a clear level of resistance at 525. When the stock ran up, but when it got to 525, it ran into a wall of sellers. And the sellers just kept putting out their stock, letting the buyers take all they want. And then the stock reversed. Now it rallied again and got back up to the same level. Remember, markets have memories. The market in October, this is probably a week ago, the market in October remembered that there was this top in August. So we have a clear resistance level. We have a clear support level. Now, say a particular investor bought the stock down here at 450, and they said, well, I want to sell it if it gets to 550. Well, guess what? They would have their sell order up here. It wouldn't get executed. So there's a chance that they would miss selling it. The stock could come back down to 4, and now they're losing money instead of taking a nice profit. Instead of having their sell order at 550, they should have probably put it around, like, say, 520. Right? So this is an example. We have to let the market tell us what to do. If you try to tell the market what to do, you're not going to have good results. We don't say, why is there resistance at 525? I don't know. We just know that there is. The market is telling us, don't place your sell order at 550. It's not going to get there, at least not anytime in the near future, unless there's some news or something. So the market is telling us where to place our sell order, right? Down here, the market is telling us where to place our buy order. So the best traders in the institutional world, and probably in the retail world as well, realize that you have to let the market tell you what to do. A lot of students ask, like, if I buy a stock, how do I have a price target? Or I'm sorry, what's my time frame? How long do you stay in the market for? Well, the answer is easy. If you buy a stock at $10 and your target is 15, if it goes from 10 to 15 in a week, well, you have a 1 week time frame. If it goes from 10 to 15 in 2 months, you have a 2-month time frame. We're not, like, guessing when it's going to get there. We have to let the market tell us when to sell. Catalyst Bio, here's just another example of clear support around 415. So this is a year ago. And as we speak, this is, I think I made this chart last night. So we're trading right around this 415 level now. So the market has a memory. Last October, a year ago, it found support around 415, and it did again and it did again here. Actually, I'm sorry, I take that back. This is going through June, but it's a good example of a clear level. This is this RA Medical Systems, Raw Medical Systems. We have clear resistance at the $9 level. So if you bought the stock here and you were a really savvy trader and you rode this up, you would say, well, where should I sell it? Well, the former peak was around 9, so there's a good chance there's going to be resistance there again. Sure enough, there was. Then we had a big sell-off after. Now, fast forward to here, the stock rips higher. This must have been caught in some kind of a chat room or a meme stock thing here, because it like tripled in a matter of days. Where did it hit resistance? Right around $9. We also see here that this is formed now this chart is up to date, that there's been support has formed around the 290 level. So again, I'll bet you a lot of people that bought this stock down here said, if it gets to 10, I'm going to sell it, right? Why? Because 10 is a nice round level. People like selling at nice round levels. But guess what? Had the investor not known that there was resistance at 9, they would have rode it up. It would have gotten right up to about 980 during the day, but it came back and closed at the resistance. And then the stock collapsed. So instead of booking like a really nice profit because you missed the trade, you're going to end up, either underwater or break even. So what the investor should have done is said, well, let me look at a chart. Where was there resistance before? Oh, around $9. Maybe the resistance gets broken and maybe it goes to my level of 10, but I'm not going to take a chance. I'm going to have my sell order just below $9. I'm going to try to sell it if it gets to $8.90. So in this situation, you're letting the market tell you what to do. If the investor put his order at 10 or her order at 10, it would be them telling the market, please go to 10 so I can sell it. But you're just guessing. What the market is telling you is there's this important resistance around 9. So you have to take this into consideration when you're making your decisions. This is TREX Health, another popular stock. We can see the clear resistance. I guess it got cut off. If we went this way, there was a 1. We don't start on 2. But we can see here, clear resistance at 795, here. Then intraday, it got above it, but it turned right around and closed back below it. Generally, we look at the closing prices. So this is just another level that's clearly important. Now, this is pretty cool. What is a resistance level, see how it was resistance, can become support. The resistance level converted into support. The $3 level is an important level for this stock. Remember what I said at the beginning. Some price levels are more important than others. So why does this happen? It happens because of seller's remorse. People thought they made a good decision if the stock trends lower after they sell it. But then when it goes higher, they regret doing so and they try to buy it back. So a lot of investors sold it here around $3. They thought they made a great decision. But then the stock rips higher and it comes back down, and look what happens. It finds support at a level that was resistance. Well, the reason why this happens is because a lot of the investors that sold it say, well, I'm going to buy it back, but I don't want to pay more than what I sold it for. So they placed their orders at $3. So they had their sell orders at $3. Now they're placing their buy orders at $3. If there's enough of these buy orders from these remorseful sellers, we form support like we do here. Same thing, resistance became support. And you can see this on a lot of charts. And if like a lot of the trading school students, I'm proud to say, are really starting to get this, because it's like anything. You got to have some practice. I mean, I've been doing this for 25 years. So I don't expect people to see levels as quickly as I do. But if you spend a few weeks or a few months just paying attention to this kind of stuff, you can see you'll start seeing stuff like this. So again, we have resistance. The seller sold. It went lower. They regret it. Went back up through their price. And they say, man, I'm going to try to buy my stock back, but I don't want to pay more than I sold it at. So they placed their buy orders at 260. And there were enough of them that it converted what was a resistance level into a support level. Clearside Biomedical, what was resistance here? Around 225 became support here. So say the stock is trending lower and you say to yourself, well, I'd like to buy it. Where should I place my buy price? I'll buy it if it gets to 2. Well, it didn't get to 2 because the support is at 225. Why is there support at 225? Because there was resistance at 225. So now we have the opposite. Support levels can convert into resistance levels. A resistance level can convert to support. Support can turn into resistance. This happens because of buyer's remorse. And I'd be willing to bet a lot of people that are watching this have done this before. They buy a stock, it goes lower. They have buyer's remorse. They regret buying it. They say, well, I want to get out of this. I made a dumb mistake, but I don't want to lose money. So they place their sell orders at the same price that they were buying at. If there's enough of these sell orders, it turns the level into resistance. And that's what happened here. See, support became resistance. Exelon Resources, another good example. Support at 235 became resistance. So the investors who bought it for 235 here thought they were great. They made a great decision. It was like, oh, it's going lower, it's going lower. Uh-oh, all of a sudden I'm underwater. They say, I want to get out, but I don't want to lose money. So I'm going to offer my stock at the same price that I bought it at. I bought it at 235. I'm going to try to sell it at 235. If there are enough of these sell orders, like there was here, it forms resistance. This SOS has a couple different examples we can see here. Support here became resistance here. Support here became resistance here. We had this little false move here, but it came right back. And now, once again, what was support may be becoming resistance. So buyer's remorse. We buy it, the stock goes down, we want to get out, but we don't want to take a loss. So we put our sell orders at our buy price. So if you understand buyer's remorse and seller's remorse, you can understand how levels change what they are. Support can convert to resistance and vice versa. So in the real institutional trading world, this is what we look at. Where are the levels? Where should I buy it? Where should I sell it? We also look at momentum and the trends, but I'm not going to get into that today because we just don't have enough time. And I think levels is probably the most important takeaway. So I would say start looking at your stocks that you like and see if you see clear resistance, see if you see clear support. From that, you can you can make your decisions. All right. Let's see. So let's just review. Serious professional traders focus on important levels, trends, and momentum. Some price levels are more important than others. Levels that were support can become resistance, and levels that were resistance can become support. And overbought markets, overbought refers to a momentum. If something is overbought, it means it's trading above what would be its typical trading range. If something is trading below what would be its typical range, it means the sellers have really leaned on it, and that is called oversold. Now, why do we care? Now, I know many of you are probably not short sellers, so that's why I bolded this, but I literally know people that have made pretty much their career off of this. Oversold markets that reach support tend to rebound. So your stock's trending lower, it looks like it's coming up to a support level. If the momentum is oversold, there's a good chance that it bounces. So I see some questions. If you have questions, if you want me to take a look at if you want, or you know what, if you see a small cap stock that you think has a clear level, why don't you let me know? Or if you have a question, you can just drop it in the chat. All right, so this is not a small cap stock, obviously. This is the spider, but we can see here we have another example of a clear level. And you can see this in pretty much any chart. What was resistance became support, and it became support again. So how can we get a good idea if this current rally is going to keep going? Well, the 453 level was resistance for the spider. And this SPY follows the S&P 500. So this is a really broad index of the market. When I talk about the market, this is generally what I'm talking about. So we got to this level, it was resistance. We broke through it, and now we want to see, does this resistance become support? So far it has. So remember, seller's remorse. People sold it, now it's back above that. They placed their buy orders, and if they're enough, that forms support. So that's the sign of a healthy market. Stock markets don't go straight up, or financial markets don't go straight up. They go up in a series of ranges, right? It's like going up a stairway. Each stairway is a trading range that's higher than the one before it. And as it goes up, levels that were resistance can turn into support. So what was the top of one range is going to become the bottom of the next range.
Hey, what's up, Mark?
Hey, what's happening, my man?
Hey, just wanted to jump in here. Definitely want to let you guys know the trading school is amazing. I was there in the class for today's session, Mark, for the momentum session. And even though it's named momentum, we were going over all sorts of commodities, silver, copper. And I think it's just a great place for people to learn, for new traders to learn, because they have that guidance, that mentorship, that hand-holding that we do offer in the trading school.
Yeah, in the trading school, what we do is there's 8 classes, and the classes repeat. So, and you know, the students are there. It's not like you've just finished the 8 classes and you're done. The classes repeat. So, for example, today's class was on momentum. So we talk about momentum. I show examples, but then what we do is we look into the real market and look at how we can apply the fundamentals we just covered to the real market. So I think the 2 things that really are good about our classes. One is I have a lot of real world experience. I'm no super genius or guru or anything like that, but I bring a lot of real world experience to the table. And the other thing is we have this live application where we talk about the markets, because I can give an analogy. Say you're a boxer, right? You could work out, all you want. You could work on the heavy bag, you could run, but until you actually get in the ring with someone else, you don't really know what boxing is. So, right. And in hindsight, everything is 20/20. hindsight is 2020. So any trading book you buy, it's just going to show you a perfect example that was picked out from the past. So everyone's a genius if they have 2020 hindsight.
One of my favorite things, though, about your particular background in Wall Street and, trading with the legends, Mr. Cohen, Jabelli, people that manage 30 billion plus funds, is really that you've dipped really your Wall Street experience in small caps, in large caps, and a lot of retail traders, they just happen to be in small caps, understandably so, which does give a great plus, because a lot of people usually they just say buy Apple or buy Facebook. But in your case, you actually have institutional experience trading small caps under Jabelli.
Yeah, my last fund too that I was at was primarily focused on micro caps and small caps. So I have a lot of experience. The same principles apply. The problem is that, or I shouldn't say the problem, but the issue with small cap is some of them are much less liquid. So, anyone could buy 1 million shares of Apple. It's an easy trade. It trades tens of millions of shares a day. But if you want to buy, 100,000 shares of a small cap or a micro cap stock that only trades 10,000 shares on an average day, that takes a little bit of savvy. You have to learn how to go out into the market and find it. It's a hide and go seek game. But yeah, so the same principles that apply to what I was just speaking about now apply to pretty much any stock or really any financial market.
Yeah, futures, crypto, Bitcoin, Forex. I mean, at the end of the day, it's people that are trading this. Even the algos are set up by people, so it's always going to be that's kind of why, like, one of my favorite classes, Mark, is the investor psychology. That is, especially from your side of the coin, from the institutional side, explaining it to retail. It definitely brings more clarity into what's going on behind, in the institutional level.
Yeah, most traders get wiped out because they let their emotions take over. And I've seen it in the institutional world. I mean, I've seen portfolio managers that have just blown up,
Belly up.
They end up getting divorced and, so it happens in the institutional world too, but you have to be aware of the psychology, because if you're letting your decisions be made by just guessing, or you're just really upset because you lost money or whatever, or you're really happy because you made money, it's not going to end good. You have to have self-discipline, which Rodrigo is talking about. So that's one of our classes where we talk about investor psychology and risk management strategies.
It's part of the education. And that's just something I just want to tone in for a bit, guys. Like, when I started trading, really the only education was the one that I was trying to teach myself, and try to become a neurosurgeon and teach yourself that you're going to see the bumps in the road. So definitely the community is very great. It's a very nice environment, welcoming environment, very educational environment. Everybody's asking questions. Everybody gets answers. You talk about trades on the trading school. It really is something that I wish I had when I started, but considering a lot of the viewers and there's a lot of new traders here, it definitely does bring a lot of clarity to have some guidance from somebody that's been there, done it, traded with the big funds, and is able to give that knowledge to retail traders so that we can become better traders for retail, remembering and keeping in mind that Benzinga focuses on retail specifically. Yep. And what's tomorrow's class, Mark? What are you looking forward to tomorrow's class?
Well, our Friday morning class, we really just review the previous 4 classes. But it's really, just open market discussion. Monday through Thursday, we have a formal class that starts at 7 in the morning and goes for 2 hours. And then we have a review class that goes from noon to 1. So we do lessons 1 through 4, Monday through Thursday. And then the following week, we do lessons 5 through 8, Monday through Thursday. And then the Friday class at 7 in the morning Eastern time is really just an open discussion for students to ask questions. We go through the markets.
I love that. I love the fact that you have office hours, you have Q&A sessions. A lot of people definitely need that extra guidance, that extra help. And Musique is asking, is there a live chat room? So yeah, we have a live trading chat room with Mark Putrino. The trading school does come with Benzinga Pro. So if you get into the trading school, you will have Benzinga Pro included forever. And in the trading school, we have a trading chat room for Mark We have a chat room for education, a chat room for office hours. Basically, we have it all separated and split up. But yes, we do have a live trading chat room in the trading school. And
it's pretty active too. A lot of the students seem to be really getting into it.
Yeah, Netflix is one that like a big winner because we did it on the workshops that we did for the members, and Netflix was a huge runner. I remember when we went over it in the session, I went ahead and bought some nice calls after that earnings call. I think it went pretty well, and you know, the rest is history.
Yeah, it could have been that we decided to buy it because it broke this resistance level. I don't recall the exact details, but just knowing what my style, that's what I would think. So that was down around 560, and now the stock is trading around 660.
Yep. And what's the update on the FedEx? I know we were looking at FedEx on the last session we did. What's been going on there?
Let's take a look at FedEx.
Benzinga Pro, Mike. Yeah, Benzinga Pro has trading view charts built in. We are including that in the trading school. That's correct.
All right. So this is something we have on our radar screen, and a couple of our students have gotten into it. So the 235 level was support, and it came resistance. So there was this gap here, which means there's not any real important levels in between where it is now and up here. So a bunch of the students bought it when it broke through. It's coming back a little bit, but we're still long it. Our stop out, meaning how we're going to get out if we're going to lose money, is going to be if it closes below 235, right? So basically, if that case, the students would have a really small loss, or maybe not even a loss at all, a break even. But if it keeps going higher and it gets up to around here, 250 is an important level. I think that's where we're going to sell it.
Hey, Mark, we're going to jump in really quickly. We have come past 11:10. We have Draganfly, our next presentation, waiting in the wings. But Rodrigo, Mark Putrino, thank you for coming in with us for like 40 minutes talking some financial education. We appreciate it.
My pleasure.
Good to see you, Michael. Great
Good to
seeing
see
you
you
guys.
too, Rodrigo. Haven't seen these guys in a while. Always good to hear from Mark Putrino, though. We had an awesome break there. We were moving into our